Okay, so what we have in front of us right now is US30 15-minute time frame. This was the last trade that I executed for 2022. This was on 12/30. The reason why I love trading on Fridays, and according to my trade journal, this is usually when I get the bulk of my gains every single month on Fridays. And a big reason for that is because a lot of the targets and direction has been setting up for the week. So there's a very clear directional bias. So if we take a look at the price action in front of us, we had a big move to the downside, and this was all initiated with this price action here. We can see relative equal highs were created, and we saw a nice strong push up, enticing buyers, right? We can see a series of higher lows here, only for price to run these highs and then aggressively flip to the other side, do a 180 and just run to the downside really fast. We can see a strong bearish impulsive move here. So this was clear manipulation, and then we bottomed out here in Asian session in this white background, giving us our swing low, also a double bottom. So we have relative equal lows here. We have the trading range swing low, and this is Asian low. So these are our future targets. So once we have our trading range, our swing high to our swing low, we're throwing our fibs on this high here. Let me get that lined up here to our swing low. So here's our high and our swing low, and we're identifying our kill zone, and that's ideally where we're one looking for entry on pullback, right? So we can see price pulled back up into our kill zone. The kill zone is the 71% to the 886, and we're looking for our candle over here to the left to our manipulation candle to align somewhere in this kill zone here. So we're either taking entry off of the candle or one of these fib levels, or we're looking for price to come into this level and then start breaking down where we can then look for entry. So in this situation, we saw price pull back up into this kill zone and into this candle and then slowly start to break down. And this is, again, what I really like to see. I'm looking for Asian session and London session to ideally be moving in the direction where I believe price to go, right? So if this is a higher time frame pullback and I'm looking for price to come down, ideally I would love to see Asian showing bearish price action, which we saw the same thing happen here. If I zoom in, we can see price move sideways here, a high and a low established, price pushed up above that high and then made a low down here. So we have a failed high because price did not exceed this high, then made a low. So this is confirming a lower high and then a lower low. And then we can see the exact same thing in London session. We can see a high established here, a low established here, and price pushed up above these highs, right? We had a little bit of a break retest level here, pushing up above those highs, right? This is just manipulation after manipulation. If you look at this move here and you can see this break retest level, price started to push down really aggressively. This is enticing sellers into the market. Where are their stops going? The most obvious spot, above this high. Only for price to run back up above those previous highs before it starts breaking down. We saw the same thing here, and we saw the same thing here. So I like to see these things and create new structure. So this new run on those highs, those short-term highs here, then made this low. Now we have a Asian lower high, then a lower low, and then a London lower high, leading into another lower low, coming into the overlap. And this is when I am primarily looking for my entries for US30 at 9:30 a.m. Eastern. And the reason for that is when equity opens. That is when the bell goes off at the New York Stock Exchange. This is when we are looking for volatility, right? Everything has a lot to do with the markets, with the correlation to time, right? You have time frames, you have the specific times for the economic events, right? You have the market open and close at certain times, candles, different time frames, open and close at certain times. Everything has to do with time. So this horizontal blue dotted line, that is 9:30, right? So we can look for a couple of different things. So at 9:30, I'm either identifying a pattern, right? A pattern, something like this. I'm always looking for a manipulation to be the basis of my trade entries. So one, I would be looking for a setup like this, where we had some consolidation, price runs above those highs and then makes its move. Those are the trading ranges I'm focusing on. And then if I have something like that for equity, I would look for price to push back up into that kill zone, into this manipulation candle, and I would get my entry. Now, if I don't have something like this created, I will look for it to be created at 930 equity. And then I would look for entry on the pullback, targeting these lows down here. So now that we have the breakdown here, we have the structure and the breakdown from this previous manipulation candle in the kill zone, that's where we're gonna zoom into this area and watch the price action at 930, okay? So let me mark up one other thing really fast here before we switch, because this is also offering a possible entry here. So that technically can be our pattern, because we saw a price run above these highs here, and that is a manipulation candle. So you could smack entry off of this, and that's a decent size stop loss down to those lows. You're gonna get a decent risk reward there. So we have one option here. This is not the one I took. There's that. And the reason why I didn't take this one is because although this price action was running these highs before breaking down, it did create relative equal highs right here, okay? But that could be offering entry number one down to those lows, that's swing low, Asian low, relative equal lows. That's gonna offer a 1 to 9 risk to reward. So really good. So let's zoom in and let's watch price at 930. Okay, here's the dotted line, that's 930. I'm gonna press play, we're in replay mode. So right there, it happened really, really fast. So I'm gonna zoom back over here just a little bit, and there's a clean time frame here. So if you look, I'm gonna move this line over just a little bit here. Look at the pattern that was created. Again, we saw right at the open of equity, price ran above these short-term highs, came very close to coming into that candle we marked up here, previous manipulation, because now we have a new trading range. Swing high to swing low, price started to pull back, but came short. But it gave a new opportunity here. And this is where I got my entry here. So now we're looking at this new manipulation candle, and we're focusing on the open of the last up candle before price pushes to the downside. So we would be dragging this right under here. That would offer our entry. We'll put our entry here, our stop above the high of that manipulation candle, and then you would be targeting the lows. Just like that. Offering a 1 to 6.5 on your money. So really solid risk reward. I typically don't get involved into a trade unless I'm getting at least a 1 to 5. So this fits that criteria. So I'm gonna slow this down a little bit. And there is what I like to see for confirmation. So typically when I see a manipulation candle like this and it has one candle to the downside, I like to confirm this on multiple time frames. I'm doing it on the time frame that I am identifying the pattern like this. So this is about a 5-6 minute time frame. And then I like to go at least 2 time frames up within the range that I've identified the setup on. And I'm looking for a swing low, so a lower low on both time frames. And I like to see at least 2 bearish candles, 2 strong candles. So if you look at these 2 candles versus this price action here, this was multiple candles, very choppy, and then this was just clear, aggressive move to the downside, 2 strong candles. So I like to see multiple strong candles before I look for my entry. So minimum 2, and I like to see that exactly what we're seeing here. Then once we have that, you would throw your fibs on this swing high to the swing low, and we're looking for entry here. And this is just a beautiful correlation with the higher time frame, looking for price to come in that kill zone, show Asian and London price action suggesting further downside. And then the cherry on top for all the confirmation is the same price action that we saw in Asian and London created again in the New York London overlap at exactly 9:30, which is what we're seeing right here. And this is just why time and price is so powerful. If I'm ever trading US30, it's at 9:30. Rarely before, but at least 9:30 or after when I have a pattern that is being created at 9:30. And then it's just about management, and I'm usually out of my trades within 90 minutes, 2 hours max. So here is price pushing down. There is more than enough confirmation, as we can see. So we have 1, 2, 3 candles, all strong bearish candles, giving us our low. Then we take our fib from our swing high to our swing low. We're looking for our kill zone, again, the 71 to the 886. Here is that right here. And we can see our entry on that candle falls right in about 50% of that kill zone. So it's a really good spot. And overall, we'd be looking for price to push back up here and then down here. So let's continue this out and see how this plays out. So here's price starting to push back. There is price pulling into that area. So that would be your entry right there. You would be executing right on that touch there. So here is the first touch. Price starts to come down. And this is why you never want to be moving your stop loss break even too early, especially when it's still trading within these two swing points here, swing high and swing low. Once price starts creating bear structure or making lower lows, that's when you want to get involved with managing your stop loss. In most cases, if you saw this entry and price push down, you go break even, price comes back up and whips this high or comes test that entry again, you're out and you're going to cost yourself money. So if I move this line over here, we can see price came back into entry higher than this one. So if you went risk free, you were out of this trade. Price came back up, tested again. You can see a really nice flag pullback here, and we'd be looking for that price to break down and targeting this low. This is primary target. This is where I took my TP right around this area here. I wasn't looking for a longer term trade just because it was the very last trade of the month, but I'll leave that here. That was still 1 to 4, 1 to 5 in these lows here. So let's continue this. And then there we can see that strong continuation breakdown. At this point, that's when you can start locking into this price action here. So where I saw price breaking down, if we go in and we look at the price action on that impulsive move, we can see it's doing the same things. So if you look at this consolidation, we saw price run above these highs here and then break down. So when I saw this, my stop loss is now above this high here, locking in profit. Let me do that, locking in profit. And now it's either my TP at this low here, or I'm just riding my stop profit, and that's where I'm exiting. I'm never manually exiting my trades. It's either my TP or my stop profit that is taking me out of trades that are running in the blue. So here we saw price push down and then overall push through that low right here. And then we saw a little bit further breakdown, but that's where I ended up taking my profit. And you can see this on the screen here, that this was an actual trade executed on the last trading day of the year. And this is, again, why time and price is just so important, especially when you're trading something like US30, and why Fridays are my favorite day to trade. Hope you enjoyed it, and I'll see you in the next one.